GM. GM. Daily levels. Today is Wednesday, the 31st of Jan. So we've got a big day today. We've got the Fed meeting. We've got the QRA announcing how they're going to fund their deficit. And we've got the monthly close coming up. So all in all, lots going on. Let's take a look first of all just at the chart. So BTC, it's moved up, broken structure, broken above the breakdown level here, the interim low, broken above the previous swing low and closed. On Monday we closed above that swing high, and we put in a reversal candle yesterday after taking out the highs. Nothing really out of the ordinary there. We've already taken out yesterday's low this morning, and I suspect that these stops aren't safe. I think Bitcoin can go down, but I don't think anyone who's shorting it here is safe, especially if we stay above this red zone, which was the main point of control for the rally up. I would be looking to see another sweep. So if we go drop down to the 4 hour, we take a look at the trend from everything from the EMAs all the way down to the 50, 100, 200. 50 is crossing the 100 as we speak. 200 is coming next. They're all compressing in together. Price is consolidating nicely at the bands. If price stays above this 42.6, 42.7 level, like I talked about last night, I think we're going to squeeze up and take those highs. I don't think that people shorting this as a top are going to get rewarded. I think more likely we'll hold in this general area, chop a bit, maybe touch the 100, but take out those highs. After that point, I think we can see whether there's the odds of a higher odds of a deeper pullback. When you zoom out, we're pushing up to where the daily bands are close to flipping green again. We've reclaimed the 50. We fell as low as the 100 and held the 100. So from a technical perspective, Bitcoin looks fine. From a data perspective, it looks pretty good as well, as you can see here. Open interest showing signs of accumulation. Pushed up on BTC. Price made a new high. Open interest made a new high. Open interest forming higher lows, indicating some accumulation here. Funding rate remaining below neutral. Okay, so the neutral line is over here. We briefly touched above neutral yesterday for a little bit, but mostly staying below neutral. Altcoins got a little bit ahead of themselves, like I talked about, and I said the altcoin pullback could be incoming. I think we've seen most of that already. We saw a little push up, flush out of some OI on altcoins. Altcoin funding, which had gone above neutral as well, is now back closer to neutral, and a drop off in the funding. So no major causes of concern here. I don't expect a whole lot to happen between now and then. The market is pretty much going to be stuck between these levels until the Fed meeting, at which point we'll see what's the expectation and then what's the reality. So I wouldn't be surprised for us to take out those lows, come back inside, but I do think those highs can get tagged. I don't know if it'll be today or if it'll be another day. If we do sell off, you're going to see a deeper move down into what we have here as previous support, which is this zone broadly down here. There's going to be stop losses resting there that could get hit if we get a deeper pullback, which would look like a bad Fed. If there's bad news out of the Fed, we'll probably see Bitcoin push down into this area. I think at that point, it probably recovers and takes out the highs. But if it did that, it would probably be a bearish sign. Right, that'd be like the bearish path I'd expect. Will be if we see trend weakness where it loses it and comes all the way back. That would indicate that this move was less of a trend up and more just a short squeeze. But people will get too short. They're already, neutral funding, open interest showing no signs of like over leverage. So if we dropped all the way down into the 41.5 level, I would expect that it would get absorbed and those shorts who pile in here would get squeezed first. Then we'd make our way back down. A lot of people think that we're just going to sell off all the way back down to here. It could happen, but I don't think that's the most likely path. I just look at this. I look at these highs, and to me they look weak. They look easy to target. Looks like bulls wouldn't have much problem grabbing these stop losses up here. So that'd be what I'm looking at today. So FOMC is 2 p.m. 2 p.m. New York time, which is 3, 4, 5, 6, 7 p.m. UTC, I believe. And then 30 minutes later you have Powell's press conference. So the expectation versus reality is all that matters. And expectation is here. Expectation is that the Fed will keep rates where they are, as they have done for the past 4 meetings. Expectation 5.5, 5.5. So we've had that now for about 6 months, more than 6 months, about 7 months. You can go to Fed Watch and see what way traders are actually betting on this. The market is typically right. So still about a 98% chance that they don't cut. They just leave it where it is. So I'd expect nothing to change there. What we're looking more at is the March meeting. So the odds of them holding steady in March are rising. If you look back here a month ago, the odds of keeping our rates where they are was just 11%. Now it's 54%. So the odds of them keeping the policy rate where it is in March is increasing. But it's down slightly from a week ago. A week ago it was 58%, now it's 54%. And even a day ago it was 58% and now it's 54%. So from a month ago where the Fed, where people were, or traders were pretty bullish on the idea of the Fed cutting in March, a week ago they got much more hawkish in their view, saying it was less likely the Fed would cut. And then as of today, and this is coming from probably from the Treasury announcement on Monday, there's another Treasury announcement coming today, it's starting to slowly tick down. The odds are increasing of a cut in March. This depends now on what Powell does today, what he says. If you see these odds decrease and these odds increase, so if you see the odds of a cut increasing in March, you're going to see the markets generally go up. Outside of Bitcoin, the things you want to look at are gold. Gold very sensitive to interest rates, monetary policy, and fiscal policy. Gold is looking pretty strong here. It's holding up nicely in this compression, as it has been. We put in a inside week last week. We've already taken out last week's high. So I talked about this on a weekly outlook, that gold is now pushing towards the highs again. Again, that depends very much on what the Fed does and what Yellen does with the Treasury announcement. So overall, markets look good. I'm still bullish. I'm still long my Bitcoin. I might buy more. I might add more to my long if I see dips and signs that shorts are getting a bit too aggressive too soon again. Interest rates as well. If you want to look at the US 10-year yield or 2-year or 30-year or whatever, what you want to look at for these is in a simple sense, bond yields down equals risk assets up. Right, so stocks will go up, Bitcoin go up, and gold. Well, gold and Bitcoin are not really risk assets. They are sensitive to interest rates. If the yields are dropping, that means it's less incentive to hold government bonds because you're getting a lower yield, and so you're more incentivized to hold something that has positive price appreciation like Bitcoin or gold, or something like stocks that have dividends and price appreciation. So those are the things you want to keep your eye on. as for Bitcoin, the reason why I think there's a decent chance of another leg up is because we've had two, right? Really simple. You tend to have three legs in any trend. It's obviously not a rule, you don't have to. But over here was just consolidation. We trended up once, consolidate, trended up again, consolidate. Wouldn't be surprised to see a third leg up into the gap, clear out this liquidity. Anyone shorting this get direct. If at that point we meet that strong resistance of sellers, spot sellers, we could go down. I don't think we've hit that strong spot selling yet, which I think is probably more likely to come up in this red zone. Above 44 and kind of below 45 would be the first place I would expect strong resistance. I don't see that what we saw yesterday, just from price action perspective, doesn't tell me that was really strong resistance. I think that was just traders getting a little bit too long, going into a high with some inefficiency below and getting flushed out. So with all that said, it does entirely depend on what Powell signals. His words in the press conference will be, all important. Everyone will be poring over them, as well as Yellen and the Treasury when they announce how they're going to fund the government deficit, the debt. They can either do through the thing you want to look out for is duration. Are they going to fund themselves with short or long dated treasuries? And that will give an implication for the market and for real yields, which is the interest rate minus inflation, or the interest rates expectations, so the yields, the bond yields, versus the inflation rate, which will tell you one measure of real yields. Powell's likely to talk today about how the economy is strong, and it takes some pressure off of Yellen as well. On Monday, Yellen announced about 200 billion that was going to need to be borrowed, which was below expectations. People were probably expecting that they would say they're going to borrow more. If that continues to be the narrative, the reasoning for that the market's going to pick up on is probably because the economy's strong. And because the economy's strong, the markets, not the markets, but the job market and consumer spending, etc., remains resilient. Also, stock market closed at all-time highs last year, so there seems to be an expectation that tax receipts, which is a big part of how the Treasury funds itself and how the government funds itself, the income they get is predominantly from tax receipts, right? People who pay taxes. If there's higher than expected tax receipts from 2023, which seems logical since every company did well, pretty much, at least the major, the top, the Magnificent Seven did, and to be honest, for all the doomers that were out there, the US economy just did well. You can't deny that in 2023. So if investors are at all-time highs, they'll have higher capital gains tax if they've realized any of that. And if companies have had decent revenues, decent profits, there'll be higher tax receipts. If people are still employed, which they are, unemployment rate is low, there'll be higher tax receipts. And that can be a boost, because it means the Treasury can say, we don't need to borrow as much money because we've got tax receipts coming in, and so on. So with all that, you want to be looking at, I don't know exactly what time the next part of the Treasury information is going to come out, but I do know the timing of the Fed meeting, which is going to be at 7 p.m. UTC roughly, and then Powell's press conference about 7:30. So I'll be online for that. I'll be posting about that at the time. And if we just take a look through altcoins, like when I saw this here from alts, to me, this doesn't look like a top for alts. I would say it obviously could be, but if we come down into this strong support, which is the blue zone, as you can see, it held, and we haven't pushed towards any major resistance, which is up here. I would say on balance, it's more likely that we have another push higher before any rejection. If it rejects from here, I would still expect this to hold. I mean, to me, it just doesn't look like it's going to break down to clean new lows. And while anything can happen, I would say that this support is going to hold until we meet some major resistance, which could be here, or it could be taking out the highs. So on balance, I would say things are skewed slightly to the upside. But in terms of like my short-term trade, I've taken most of the profit off. I've realized a lot of profit on my Bitcoin long. It's not to say that just because I think things can go higher here, it's not to say that adding new longs is necessarily a good idea at this point. Right? You have to understand the difference between those two things. If I think that we can go higher, which I do, but if I've been long from down here, right? If I was long from here and we touched up there, if the expectation is that we can push a little bit further, it doesn't mean that getting long in this area is a good idea, because your downside risk would be to go all the way back down. Your upside reward is the red zone. It's not a positive risk reward to take that trade. So you have to also keep that in mind. This is very much shorter term as we go, as we push towards highs, and we'll see from there. Solana, I'll actually do that on trade of the day. Ethereum had its little bounce against Bitcoin, but I sold my Ethereum last night back into Bitcoin, if you saw on trading analysis. That was always the plan. I got bearish on ETH BTC, not bearish on ETH itself, but bearish on ETH BTC down here. Well, you don't sell the lows, wait for the bounce, waited for the bounce saw what I wanted to see, sold it. ETH BTC continuing its weakness now after a minor pump. I just don't think a whole lot's going to change about ETH BTC. I think the weakness will continue. Maybe we grind down in this kind of blue path, as Bitcoin just has far more positive catalysts. You know, ETF is now flipping from sell the news into oops, did we sell the bottom? And I think that will continue as well, especially if gold does well. So today, keep an eye out on bond yields, gold, Bitcoin. You can look at the stock market too, but bond yields, gold and Bitcoin are the big ones to keep an eye on when you see the Fed and the Treasury. That's it, GM. See you later. Live stream, 5 p.m. UTC.